Imagine moving to a new country where you have money, a stable job, and years of financial experience, yet the system still treats you like you don't exist. You try to rent an apartment and get rejected, apply for a credit card and hear no history, and even getting a simple phone plan becomes difficult, all because in the United States, your financial life depends on one invisible number called your credit score. The good news is that building U.S. credit from zero is possible, and in this video, you'll learn how immigrants, international students, and skilled workers can build financial trust step by step in 2026. How money works differently in America. Before building credit, you need to understand something surprising about the American financial system. In many countries, cash and savings prove your financial strength. In the United States, trust matters more than money itself. Banks, landlords, and lenders want to see your financial behavior over time, not just how much money you have today. This behavior is measured through a credit score. The most widely used scoring system is called the FICO score, which ranges from 300 to 850. A higher score shows reliability, while a lower score signals risk. This number affects where you live, how much interest you pay, and how easily you access financial services. The challenge for immigrants is simple but frustrating. When you arrive, you start with no history at all. It is like starting a game at level 1, regardless of your experience in your home country. But once you understand the system, you can begin building trust quickly. Your first step: building a financial foundation. So where does the journey begin? With a U.S. bank account. Think of a bank account as your financial identity in America. Without it, building credit becomes extremely difficult. Most newcomers can open a bank account using a passport, proof of address, visa documentation, and either a social security number or an individual taxpayer identification number. You will typically open two types of accounts. A checking account handles daily spending, such as bills, shopping, and transfers. A savings account stores emergency funds and shows financial stability. Banks observe your account activity, and over time, this history supports future credit applications. This simple step quietly builds your financial reputation and prepares you for the next stage. But here's something many newcomers overlook. How you manage your money across borders also affects your financial future. The hidden cost of sending money home. Many immigrants regularly send money to their family members in their home countries. But what if you are losing money every time you transfer funds without realizing it? Traditional banks often charge high transfer fees and unfavorable exchange rates, meaning a significant portion of your money disappears during the transaction. These hidden costs are rarely explained clearly, which is why many newcomers unknowingly pay more than necessary. Modern transfer services such as Wise, Remitly, Western Union, and PayPal Zoom provide alternatives that are often faster and cheaper. Comparing fees, exchange rates, and transfer speed can save hundreds or even thousands of dollars each year. These small financial decisions may seem minor, but they create long-term stability and help you support your family more efficiently. Now that your banking foundation is set, the next step may feel uncomfortable: borrowing money. Yet understanding this step is essential because responsible borrowing plays a central role in building financial trust in the United States. Why borrowing money builds trust. It sounds strange at first. Why would borrowing money improve your financial reputation? In the United States, responsible borrowing proves reliability. The most common starting point is a secured credit card. Unlike a traditional credit card, the secured card requires a deposit. If you deposit $300, your spending limit becomes $300. You are essentially borrowing your own money, but the bank reports your payments to credit bureaus, creating a record of your financial behavior. Using this card for small purchases such as groceries or subscriptions and paying the balance in full each month gradually builds trust. Over time, banks may upgrade you to a regular credit card. For international students, student credit cards provide another accessible option. Some newcomers also become authorized users on a trusted person's account, benefiting from their positive payment history. Each of these methods creates the same result, a record of responsible financial behavior that strengthens your financial credibility. But what exactly determines whether your credit score increases or decreases? Understanding this system helps you make smarter financial decisions and avoid costly mistakes. The formula behind your credit score. Your credit score is not random. It follows a clear formula. The largest factor is payment history, which shows whether you pay your bills on time. Even one missed payment can damage your score for years. The second major factor is credit utilization, which measures how much of your available credit you use. Financial experts recommend using less than 30% of your credit limit to maintain a healthy financial profile. The age of your credit accounts also matters because longer relationships demonstrate reliability. The variety of credit types and the number of new applications influence your score as well. Understanding this formula gives you control. Instead of guessing, you can follow simple habits that gradually improve your financial reputation and open access to better financial opportunities. But success in credit building does not come from complicated strategies. It comes from consistency, patience, and disciplined financial habits practiced over time. Small habits that create powerful results. Building strong credit is not about spending more money, it is about using credit responsibly. Spending small amounts, paying balances completely each month, and setting automatic payments prevent mistakes. Monitoring your credit report regularly helps detect errors or fraud. These simple actions may seem ordinary, but over time they produce extraordinary results. Many immigrants try to avoid credit completely because they fear debt. Ironically, avoiding credit can make financial life harder in the United States. Responsible usage, not avoidance, builds opportunity. With patience and discipline, your credit profile becomes stronger month after month. And this strength influences more than just loans, it affects your daily life. Living without credit, real-world challenges. Without credit history, even basic activities can become difficult. Landlords may require higher deposits or additional documents when renting an apartment. Some financial services may charge higher fees or deny access altogether. However, new tools now allow rent payments to be reported to credit bureaus, helping renters build credit while paying for housing. This shows how everyday financial behavior can shape long-term opportunities. Once your financial stability improves, another important question emerges. How do you grow wealth, not just build credit? Investing, turning income into long-term wealth. Building credit creates stability, but investing creates growth. Many immigrants do not realize they can legally invest in the United States even as newcomers. By opening a brokerage account with companies such as Fidelity, Vanguard, or Charles Schwab, individuals can begin building long-term wealth. One of the simplest strategies involves index funds, which spread investment across many companies and reduce risk. Employer-sponsored retirement plans, such as 401k accounts, also provide powerful opportunities for long-term savings. Investing may seem complex, but starting early with small amounts allows time and compound growth to work in your favor. The earlier you begin, the greater the potential reward. But how long does it take before you see real progress? How long it takes to build good credit? Credit building requires patience. After several months of activity, your credit score begins to appear. Within a year of responsible behavior, significant improvement becomes possible. After 2 years, many newcomers achieve strong credit standing. The process is slow but predictable. Consistency transforms small financial actions into powerful results. And this leads to the most important realization of all. Starting financial life in a new country can feel confusing and overwhelming, but building credit in the United States follows a simple path. Open a bank account, use credit responsibly, manage money wisely, and stay consistent. Over time, these actions create financial trust, stability, and opportunity. Your credit score becomes more than just a number. It becomes the foundation of your future. Building your financial future in America starts with the decisions you make today. If this guide helped you understand how U.S. credit really works, share it with someone beginning their journey and help them succeed too. And if you want to be smarter every day, like and subscribe.